You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. This episode is sponsored by Demand Derivatives, a startup futures exchange and clearinghouse trading the world's major assets in a creative new way. You already trade on an exchange. Here is your chance to own one. Before they approach large strategic partners for funding, the pioneering team at Demand Derivatives launched a crowdfunding portal so that regular traders have the chance to buy shares. Learn more and become a part of this revolutionary fintech project now at demandderivatives.com/crowdfunding. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster Giovinazzi from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That music means it is time once again to commence our broadcast week here on the old Options Insider Radio Network. What better way to do that than with the first of our two bi-weekly episodes of the Option Block, your bi-weekly source for all things options related. Underline that, all things. Whatever you want to talk about options related, we'll get to it here on this show. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the ever-exciting network upon which you are binging right now. Remember, if you like what you hear this show, anything we do on aforementioned network, keep rating and reviewing it wherever you get it. Could be anywhere out there. Spotify, Podbean, the app stores, wherever the heck you get our content. More and more platforms coming online. Amazon Music has it now. I mean, you name it. Another week, there's another outlet carrying our stuff. Wherever you get it, keep rating and reviewing so new folks can continue to discover it. New listeners, new outlets carrying it all the time. It's crazy days out there. So keep those folks tuning into us. It really does help them. It helps us, helps everybody out there. And of course, keep those questions and comments and indeed theme song suggestions. You guys love this segment here because we like to kick off our broadcast week doing something a little bit fun, a little bit different, playing some fun 80s tunes and seeing if my cohorts here, my compatriots on the all-star panel, can guess them. And today we're going to go a little bit deeper, a little bit more into the obscure back catalog, because Uncle Mike, our listeners are coming for you. They're deciding, you know what? You've had too much luck. They're going to unseat your, some might say, uncanny string of back of the pocket guesses here as we dive on into our Can You Name That 80s Theme Song segment. All right. I think we got the gist of it. I don't want to keep going because I do believe they say the name of the show in the song. I tried to bleep it out there, so I don't want to make it too easy for the aforementioned Uncle Mike. But Uncle Mike, this one was addressed specifically to try to derail your uncanny guessing strengths. Let's first welcome on the uncleist of Mikes, Mr. Uncle Mike TOSAW from St. Charles Wealth Management. A, welcome back to the program. And then B, can you name that show/tune, sir?
Great to be here as always. I will guess Alice.
Oh, interesting. So finally, the streak has come to an end. Interesting. Let's see.
All right.
Let's see. Before I name what it is, let's see if the meatball. I won't begrudge you, Mr. Meatball, if you don't know this one. This one was an obscure one, even for me, the keeper of the 80s theme song trivia here. So, first off, let's welcome on from deep in the heart of Texas, Mr. Mark Sebastian, the greasiest of meatballs, the Robin Hoodist of Robin Hoodiest guys over there in the land of the pit. Mr. Meatball, A, welcome back to the program. And B, can you name that somewhat obscure show?
It's good to be here. And I want to say this is one of those ridiculous shows that was on for a season where it's like, man cop with monkey or something like that, or something along those lines, and something that takes place in the circus or something along those lines. I have no idea.
You're actually not as far. I'm going to give you like maybe a tenth or a quarter of a point for the monkey part, because you are right about that. This one was suggested by our friends Joe and Linda, aka my boy Luigi, in the chat. He said, Monday's theme idea. I am thinking this one is Uncle Mike's magical flyer bag doesn't have. I might be inclined to bet Passarelli's $1 on it as well. Laugh out loud. Oh, yeah, by the way, our cohort there on Options Bootcamp, Uncle Mike, Mr. Dan Passarelli, has publicly accused you now on multiple occasions for being a welcher on your $1 bet with him from our election night special. So you might have to address that later on. But he goes on to say, how about BJ and the Bear? It first aired in 1979, but it did run through 1981. So technically it qualifies. So I'll give you a quarter point for the monkey, Mr. Meatball.
Yeah, thank you. I was trying to remember because I kind of faintly remember that show, but it's, in 1981, I was like, 2 when that got canceled. So
there was a while there was a whole oeuvre of monkeys and big rigs. There was the Clint Eastwood movie. Maybe this was based on that or vice versa. I forgot which came first. I don't know. But either way, monkeys and big rigs was a thing for a while there. You know what else is a thing? It's the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody. Welcome to the trading block, the portion of the show. We break down what the heck is trading. And by this point, it's another day that ends in Y. You don't need me to tell you that the markets are green, if ever so slightly, not a huge green day out there. S&P up about 1/3%. Dow closing in on about 0.4%, and NASDAQ very close to up 0.5%. So another day that ends in Y, more green on the screen. Coming into showtime, we saw most of the major vol indices actually ticking back a little bit after giving it back on the weekend. VIX coming into showtime is at about 2175. It's still pretty much at about 2175. That puts it up about 0.75 of a point from last show. So right now, wherever he is, the Rock Lobster is lamenting the fact he's been harping for a while that it can't get through 21 in this pandemic era. And it got there ever so briefly last week. It broke through the 21 handle, at least in the cash. The futures are another story. And now it's back up to 2175. So that 21 line is certainly an interesting line that VIX seems to like to creep right up to and then retreat back away from. Coming at showtime, VVIX was at about a 110, puts it up about 2 points, pretty close to where it was this time last show. VXX, a product you guys like to fade, right around that 16.5 level still, down about 1/4 of a point from our last show, but not really breaking through that level with any gusto either. Even though you've gotten some good erosion, you've gotten about 4 points over the past week and change. So you can't really lament if you're out there in the VXX erosion cohorts. So you haven't gotten anything today yet. And Vol Q, aka the at the money vol of the NASDAQ 100, down a point to 2175 from our last show. So a lot to talk about here, but what's the big news in the market? If you can think of 2 volatile names, listeners, that you wanted to put together outside of the GameStop madness. Let's get away from that for a second. But 2 names that we've often joked about are kind of synonymous with, shall we say, excess speculation, let's say extreme volatility, yeah, you probably say Tesla and Bitcoin. Well, they're doing that dance together. Two great tastes that taste great together. You might say out there, Tesla investing $1.5 billion in Bitcoin, which already sent it soaring north of the 40,000 handle, over 44,000, I believe. By the way, we'll get into more of that in a bit on the crypto rundown coming a little bit later today. Also going to take Bitcoin to buy some Tesla cars out there. So finally cementing an alliance that many people thought already really should have existed. There's a lot of overlap between, shall we say, the Tesla devotees and the Bitcoin hodlers out there. They tend to be a similar demographic anyway. So bringing these two together in a more official capacity. Musk has discovered he can move markets, and he seems to like it. So he's doing it out there willy-nilly. So a lot to unpack out there. Let's go back around the horn. Let's go back to the greasiest of meatballs. Mr. Meatball, what is lighting up your day on yet another day that ends in Y, a.k.a. a green on the screen day, sir?
Well, I got to say, I'm surprised that they bought Bitcoin instead of Doggy Coin, because that was what I thought they were.
You're not a Doge fan? You don't like investing in things that were started as internet meme jokes?
Doggy Coin, how can you lose? That Tesla news is really surprising. It blew Bitcoin out. I mean, Bitcoin has absolutely blown up. It's over $44,000. It's pulling Ethereum higher with it. You have the whole market up across the board. The Nasdaq's kind of the slow guy today. We're seeing strength in the commodities. ExxonMobil's having a day. CVX is. So you've got some of your old line names having a really good day. The Dow, you can always tell it's a good day for oil when the Dow is outpacing the S&P, and that's what we're seeing today. The Dow is absolutely the strongest on the board. In terms of the VIX, we got a little bit of a weekend effect thing happening today. I do still feel like we're going to see some downside pressure, certainly on the VIX futures, but on VIX itself, I especially if we kind of sit around and at this 3,900 level for a little bit, which I would not be surprised if we didn't, tread water for a couple of days after getting to 3,900. I think that is certainly in the cards.
Yeah, you were saying you think VIX is going to be sub 21 even by settlement this week, so it's got to kick into gear.
Yeah, I do. I think there's an entire possibility that you could see our first sub 21 settlement. And then next Wednesday, if you look at all the positioning, Mark, do you know how many, and I know this isn't vol views, but I wanted to point this out. Do you know how many open contracts there are on the Feb 2025 put and lower? So these have 9 days to expire. And it's the 25, the 24, the 23 down to the 17 strikes. So 8 strikes.
They've been trading size. I know 23, 22, 21 puts have been trading a ton. I'm going to say, if you add up all those strikes, I'm going to say 450,000.
The total open interest on those strikes is 1.8 million.
Oh, so I was about 4x off.
Yeah, well, but that's the whole point, right? You've got like single strikes that are 350,000 in open interest. It is absolutely bananas how much downside open interest there is in Feb. The biggest trade on the day was the March 23 puts, outright buyer. And then we saw a May 18 put buyer today too. So, it kind of has an inherent bid because of all of the kind of hedged long futures against these puts. But when they start breaking, you could really see kind of a gamma squeeze on a downside move in VIX because there's so much open interest. So it is interesting. I know they were talking about, we could make VIX run higher. Probably not. But you know what? I would not be shocked if they made VIX run lower.
Well, that is some size OI. I mean, we haven't talked about that on vol views, right, for a while. It seems like every time 23 put, 22 put, pick the month, pick the strike, pick the weekly. That is what's trading. So that is some size OI. That'd be interesting. A gamma squeeze to the downside there, sucking VIX down. The market certainly seems, the preponderance of the interest certainly seems to want to be heading that way. Let's head on now out to the quiet, tranquil land of St. Charles. They don't fade anything out there. They're bullish. They want things to rally. Mr. Uncle Mike, A, welcome back to the program. B, first off, let's get to the heart of the matter. What do you think of our listeners specifically trying to derail your streak there, number one, and actually succeeding? Number two, what do you think of Mr. Passarelli's frequent lament that you have not yet paid him his $1 in any form of currency, including Dogecoin? And then C, what is lighting up your tape out there today? Three big questions inquiring minds want to know.
All right, let's address the Passarelli issue first. I've reached out to him, asked for an address or a Venmo name or whatever he needs. His dollar is ready to be given to him. I honor my debts, especially silly election night wagers with which I lost. So an open letter to Mr. Passarelli, or what's your address? How do you want your dollar? What do you need here? So that's the first thing that I'd like to address. Second thing, in terms of the 80s theme, never heard of that show. I was royally stumped on that one. So way to go, Luigi. You got me. Now, in terms of how this market's going, whenever I think it's a good analogy of what you put is that Elon Musk knows that he can move the market and he seems to like it. So that's definitely a thing right now. And it was funny. I was just kind of looking around for Bitcoin related stocks. A client was interested in that. And I'm like, Tesla would not have been one that I would have picked, but now maybe we have to add that one to the list. Who knows? So we'll have to see with that one. So on today, definitely a move in commodities. Silver is up over 2% on the day. We're still off of the highs that we had roughly a week ago when Reddit was going to make silver the next big thing, so to speak. So we're not there, but silver is definitely getting some movement today. Financials are up a little bit on the day. And then, of course, as Mark had mentioned, oil is up on the day as well as XLE. So we have that. We do have new all-time highs in the market. I'm not even going to say my thing anymore because it's worn out because we have new all-time highs so frequently. So I'm going to suspend my trademark saying on new all-time highs for a little while nonetheless. So we have that going on in the marketplace. And I think that with where we are, the S&P is creeping up towards the 4,000 mark. I remember this is how long this show goes. I remember when we were creeping up to the 2,000 mark on the S&P. So, and it was on this show. And so we are approaching a key number. And should we hit that number, we'll see what happens from there. But we have that vaccine news that's coming out that's could be market moving, is that it appears that we're getting more vaccines more rapidly, but we just need the infrastructure to actually get them out to people. That's the issue with which we're having now. President Biden made his pledge to get schools reopened within the first 100 days of him in office. Once again, I'm not trying to be political on this, but that does seem to be a priority. Teachers unions are fighting back on that in a lot of areas. I know in Chicago they are. I know in Philadelphia they are. I know there's other areas throughout the country with which they're fighting back on that. But nonetheless, when we do get our students back in schools full time, I think that that'll be a positive thing for our economy in that we're just, if anything, it'll get the kids out of the house, for crying out loud. How can that not be a positive thing? So that's another thing that's going on at this point. COVID numbers do appear to be coming down. I know in Illinois in mid-November, we were struggling, at least out here in the Tri-City area and the St. Charles area, in terms of having emergency rooms and ICU beds very full. That's coming down. And so whether that's because of the vaccine starting to have a good effect or more people staying in because it's just so darn cold out, who knows? But we are seeing positive things from that. And ultimately, I think that a lot of the bullish run in this market is just kind of forward looking in that people believe that this will be better. And ultimately, hopefully, regardless of your market position, hopefully it is better. And I think it will be. So that's what's going on in my world.
Let's see what's going on in the broader options world. Not a lot of paper on the tape in the major indices. As of a few minutes ago, VIX putting up a little bit north of 250,000 contracts, about 260. The ADV ticking down a little bit as well, down to 638. So the ADV is still pretty robust. Hard to maintain. It was almost 660 last week. So kind of going to come off a little bit out there. SPY at about 2.3 million, the ADV 4.3 million. So right around half of its ADV out there. The S, 650,000 contracts on the tape. The ADV 1.2 million. So a little bit north of half of its ADV there as well. So S has been ticking up a bit of late. The Q's 573,000, the ADV 1.04 million, and IWM at 501,000 contracts, just a tick north, a 500,000, the ADV 745,000 contracts. Let's move on out to the single names. This has certainly been an interesting list to watch of late. Lots of fun names fighting their way into the top 10, including a lot of newcomers. Like today, number 10. Cost you a little bit north of 250,000 contracts to break into the top 10. That gets you to MARA, ticker symbol M-A-R-A. This is Marathon Patent Group. If you're not familiar with them, you're not really watching the crypto space that much. They're a holding company that has a bunch of different patents and also does a lot of crypto mining. So they're going to move pretty much in lockstep with the cryptos out there, and Bitcoin's having a good day. So Marathon Patent Group is having a good day as well. $29.99 out there right now, about $7.50. Oh, a whopping 33%. So good day for them. Also good for options volume, up 254,000 contracts. Number 9, getting some of those meme stocks. Easy for me to say. Meme stocks back in the top 10. We got Game back in there, 282,000 contracts, fighting to hold firm around that 60 handle. It's off about $3.50 today, just a tick north of $60, but it's off about 5%. It was trading north of 70 this morning, so we're still getting fits and starts in Game. People are still trying to battle it up, and it keeps coming right back down. Number 8, NVIDIA out there. You know, they were for a long time the canary in the crypto coal mine. As went NVIDIA, so went the crypto market. These days, NVIDIA has a bunch of other irons in the fire as well, but it's good for a tune of 344,000 contracts and a number 8 spot in the top 10 today. Number 7, back to the meme names. AMC, 402,000 contracts. AMC, last I checked, had broken down quite a bit. Let's see where it is right now. 606, got a little bit of it back. It was almost $7 this morning. Then it dripped down. I checked it this morning. It was north of $6. It was shy of $6. It was $5.78. Now it's ticked up a little bit again, back north to 606. But still well shy of the 20-odd bucks or close to it got back in the height of the meme frenzy out there. AMC was one of the more interesting and one of the more tradable of those crazy meme names out there. Silver never really amounted to much. GameStop was insane town, but AMC was a little bit more tradable. Some of those verticals were a little bit more interesting out there. And it's good for the tune of 402,000 contracts right now. Number 6, AMD. Our perennial top 10er. So switch the C to a D, you get AMD, 472,000 contracts. Number 5, NEO. Going back out to electric car land, 484,000. Number 4, Palantir. The counterpoint to our Eye of Sauron coming up in a little bit there. 509,000 contracts. Palantir lighting it up out there today. Let's see what's going on. Palantir really quickly. They're up almost $3 or 8.5% to nearly $37. I don't know what the news is out there. Oh, they have a deal with IBM. So there you go. On the rampage yet again. Number 3. Yes, number 3. I said it. Tesla. 571,000 contracts. That's usually a good enough for maybe even number 2. Not today, because good old Zoom, a.k.a. ExxonMobil, ticker symbol XOM, a.k.a. ZOM or Zoom, call it what you will. That's surging into number 2. With 637,000 contracts. ExxonMobil up about $2 today. Just ticked to $52. That's about 4%. Of course, oil has been one of the other sagas of this madness for a long time. It was languishing around the 40 handle, now threatening that $60. I think it even broke it recently. So yeah, that's been an interesting story to watch. People were fading upside in oil for pretty much almost as long as we've been doing TWIFO. And suddenly that worm has turned out there. And it's good for ExxonMobil as well, up for $2 or 4%, and to the tune of 637,000 contracts. You know what number 1 is? It's still the big dog, Apple, 743,000 contracts on the tape. Listeners talk all this talk about the car, Hyundai, Kia, will they, won't they out there. It's been a lot of drama for them. Also, this absurdly expensive VR headset they've been talking about out there. It's a lot of stuff driving the flow out there in Apple land. Let's see what's going on from an earnings perspective this week. Remember, if you want the reports, earnings move result, earnings season reports, you know where to go, theoptionsinsider.com. Top right corner, options, news, and articles tab. You're off to the races. All of it completely for free because we like you guys. All right, so let's see. We got a bunch of, we're big names last week. There still are some big names popping off this week. We got Twitter. tomorrow. Cover your ears, Uncle Mike. Cisco. Don't. If you don't know what I'm talking about, go back to the archives of the show. Cisco tomorrow as well. We got LYFT tomorrow. We got Wednesday. We got GM, Coca-Cola, and DuPont. GM probably winning the Super Bowl ad meter with that fun ad with Will Ferrell wanting to go after Norway. That was pretty funny. Thursday, PepsiCo and Walt Disney on Thursday. See if they can possibly justify this, shall we say, elevated share price. Everything else they do is closed. They can't launch a cruise ship, the parks, everything else. But because of Disney Plus, the stock's up, 75% last year. Let's see if they can justify that. Of course, earnings are a weird beast these days. Who knows if they have to justify anything? Let's see. Coming in right now, hot off the presses, we got earnings move results reports for Hasbro. Ticker symbol HAS, HAS, 97.25. They were popping off this morning before the bell. They went into their announcement, 97.25. They were pricing in, get this, listeners, 7.6%. That's a fair amount of juice for Hasbro because they actually moved 2.7%. So yet again, buying vol in the earnings season has been a demonstrable loss, demonstrable failure. Let's look at the earnings season report, see how it's stacking up. Yeah, it's looking pretty rough for vol buyers there as well. Week 1, 52%. So if you bought $1 worth of vol, you got 52 cents back on your dollar. Week 2, a little bit better, 56 cents back on your dollar. Week 3 so far, looking all right, 92%. We'll see if that can persist. But yeah, this is a crazy town. Luckily, there are more big names popping off this week. Tomorrow, Cisco, $48 going into this report. They were pricing in $244. In the past, they moved $279. So maybe they're getting the memo out there. LYFT, they were at $53.12. They were pricing in $441. In the past, they've moved $432. So there you go. Pretty much in line there as well. Mattel, Barbie Land. Let's go on the other side of Hasbro there. They were at $18.50. They were pricing in $1.70. In the past, they moved to $1.19. Well, that could come back to bite them. Let's see Twitter. Always good for some analysis, some stories, some volatility out there. $56.78 as of this report. They were pricing in $6.37. In the past, they moved $6.65. So seem like they're getting the memo out there. GM $54.41. They were pricing in exactly $3. In the past, they've moved to $1.85. So maybe pricing in a little bit more juice due to all this EV madness, all this EV noise that they're making out there. Let's do a couple more here. Let's go to Uber. Uber is always good for some vol. $58.50 as of this report. They were pricing in $4.40. In the past, they moved $4.27. So pretty much in line out there as well. Under Armour. Let's see. They're on the 10th. $17.74 as of this report. They were pricing in $1.90. In the past, they moved to $1.86. So it seems like the earnings are coming in line. I was talking about Disney. Let's see what Disney is up to. This is an interesting one. Disney popping off on the 11th. They were at $181.16 as of this report. They were pricing in a whopping $10.40, listeners. In the past, they moved $4.72. So that is an interesting one. They're pricing in Disney to move here. We'll have to keep an eye on this one. They're coming up later this week to see. That's, again, maybe not that surprising given how much that stock has moved of late. Then maybe they're prepping for a little bit to come back off. Either way, though, pricing in several times their recent movements for a straddle. And if past is prologue out there, that ain't going to look too good. You know what will look good, though? It's our Eye of Sauron. So let's get to it.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. Welcome to the Odd Block. Mark, we've trained our listeners so well. We've educated this new generation of people out there. They almost don't even need us anymore. They can predict what our Eye of Sauron is going to be looking at, just like our friend here, Revon Gorges. That name sounds familiar. I believe he's written in before. He says, I bet the Eye of Sauron is going to find UBS May 21, 17.5 calls today. Only almost 60,000 contracts on the tape. And yes, you are correct, Revon. That was kind of a big one. That wasn't exactly a needle in a haystack out there, but that was a big one. Indeed, the big dog on the tape today. So yes, our Eye of Sauron first alights upon good old UBS, ticker symbol, of course, UBS, trading right now $15.30. This is a fairly cheap one to be doing so much paper. The saga of UBS, interesting one a year ago, trading $13.06. And then we all know what happened on February 20th into March. It got clipped. It got down, pretty much cut in half, about $7.50, almost half. And then it rallied again by, let's see, April 29th was trading almost 11. Then it sold off again. Then it went up to our favorite day, June 8th, $11.95. And then it sold off again and didn't really hit that level again until about September. So unlike most of the other names we covered last year, it actually managed to retrace and recapture its June 8th high before the end of the year. And then it sold off again down to, let's see, about $10.50 before it started rallying again, all the way up to nearly $15 in November. And then it eclipsed that again, got up to about $15.50 beginning of the year in January, and then kind of sold off again. It's kind of been languishing on this mid to low 15 level kind of ever since. And that's where we find ourselves today, coming into today about $15.30. And as our listener rightly points out, our Eye of Sauron, it'd have to be blind to miss this one. This is definitely one of the larger single name prints going up today. It is, as our listener alluded to, the May 17 halves going up for size. The first block that really came across our radar, 5,037 of these calls going up for 20 cents, lifting the offer. They were nice and tight, 15 cents at 20. That didn't last long. By the way, if you're wondering, that is a 30.6 volatility. The stock was 15.12 when these calls started going up. And then they kept going up and kept going up and kept going up and probably are still going up right now. Let's see. There are earnings in this cycle. The next announcement is April 27th. So this one is going to go out about a month after that. So getting some earnings juice baked into these as well. They came in a little bit later, did another 4,570 for 30 cents. You can see what's going on, bidding them up, bidding the stock up there as well. 3,348 for 35 cents and so on and so forth. So I said they're trading about 30.6%. At about 9:30 in the morning. By about 12 o'clock, they were trading for 36.5 vol. So the vol was starting to tick up. Right when we came into showtime, they had done over 87,000 of these things. So someone clearly has an axe to grind. Let's go out there and see if they put up any more since then. Oh, yes, they have. Now it's a total of 114,000 May 17 halves. Wow. This is the mother of, this is not an axe. This is a steamroller. This is something else entirely. This is a different beast. Mr. Meatball, what could you possibly have to say here about someone, I think, buying all of them? There's no more to be had. They bought all of the May 17 halves in an otherwise fairly sleepy name like UBS, sir.
Well, I'm going to go out on a limb and say they think the stock's going up.
I don't believe that at all. So I think they're very extremely bearish.
Yeah, no, this is 100% a bullish play, and someone taking a pretty big swing, a huge swing on, like you said, the sleepy name. So this is one that we need to definitely keep an eye on, because that is a whale in a pond, big trade.
Yes, this is a whale in a drinking fountain. This is huge. A good eye there, Revon. See, you're starting to catch on. And pretty soon you start finding the small ones, the 3,000 to 5,000 lots going up amongst other ones. But it's good to start somewhere. You start with the 117,000 lots. Good job, nonetheless. Yeah, we're coming back to this bad boy. This is a lot of upside. This is a lot of gamma in a name that is pretty cheap. I mean, for that amount of outlay, you could buy a serious amount of UBS and just have it. So clearly, that's not what he wants to do. He's buying out of the money calls that if this thing just sits around, that money is going the way of the dodo out there. So yeah, that's an interesting one. We're going to come back to that one. Speaking of coming back to things, Mr. Meatball, put on your way back pants, because we're going to go back a little bit. That UBS really took all the oxygen out of the room today. Not a lot else that's really of note today. So let's go back to try to clean up some of our to be watched file, because it's enormous. It's overflowing these days. Let's go back to December 10th. We talked about Eldorado Gold Corp, ticker symbol EGO. That's a good one out there. At the time, we profiled 12,480 of the Jan 16 calls going up for 25 cents, lift in the offer. More traded on the day, just like the calls we were just talking about. This time over 43,000 traded on the day. Even though it seems like there was some back and forth on that because the OI only changed by about 30,000 contracts. So obviously a little bit of back and forth to the tune of about 13,000 extra contracts going up. So someone clearly had an axe to grind to the upside there. These were all pretty much lift-in offers on these calls as well. And it looks like this was a bit of a bridge too far here because the stock closed at $11.26 at expiration. So not pretty much anywhere near the 16 strike that this person needed. Go figure, these calls are pretty much all still open on expiration. So on that initial print we looked at, the 12,400 lot, paper dropped about 312 grand on that. If you add up all the OI that changed hands that day, or just the OI, not even the volume, the OI, you're talking about $750,000. If you add up all the volume, it's closer to $1 million. So Mr. Meatball, would you concur that a lot of money was thrown away on an upside wish here on Eldorado Gold Corp in January, sir?
Those got the gold miners and they got real hot with the, reflation trade and everything going on. And that piece of the pie has just failed to develop. Silver has moved. The cryptos have moved. Gold has not. And, you just got to wonder whether crypto is the new gold and whether gold is really no longer the safe haven, but more a place for, jewelry, and that's about it.
Interesting stuff indeed. Let's see if we can wrap it up. Coming back to another one here. This is going back to December 7th, listeners. This is Sirius XM, another one that's kind of been on our radar a bit of late. Back on the 7th of December, it was 15,000 of the Jan expiring on the 8th. So these are the weeklies. 6 half calls going up for 27 cents, pretty much right near the offer over there on the Philly. The stock was about $6.50 when these went up. There were no earnings in this. The earnings are on the 28th of January, so they missed earnings in this. So they kind of did a pre-earnings kind of upside swing for, not fight for the fences. This was where the stock was actually. So this is more of an at the money call buy. So more, I'd say like a double. This is kind of like a bunt. But you know what? Even at that kind of at the money range, it wasn't that aggressive. It never really came to fruition. The stock kind of sold off shortly after this trade and never really looked back. It bounced briefly right before, actually, that's what made it more painful for these people. It bounced right before expiration on the 6th and it hit $6.52. So just ticked up north of that strike ever so briefly just to say, hey, I'm here. And that was it. Then it dropped again. So they never really got a chance to make money on this bad boy. The stock closed at $5.91. Now, obviously, if they were gamma scalping and they were very diligent, it could have maybe worked out all right. But we're going to say that didn't. And these calls were still open. So they went out worthless. $405,000 spent on these pretty much at the money calls on a $6.50 stock. Just some basic math, listeners. They could have used that money and bought about 60,000 shares of Sirius XM themselves, and they would still have it. They'd be out a little bit, but they wouldn't be out all that money. They'd be out a little bit. The stock's about $6 right now. They'd be off 50 cents on that money, but that's about it. And if they did it on margin, they could buy about double that amount. So that's one of the reasons some people take a little bit of a dim view, certainly the Viceroy did, of trading options on names $5 or around that level. Because at that point, the stock is almost an option, and you still have something right now as opposed to that. So, Mr. Meatball, what are your thoughts on someone spending a fair amount of money on an already cheap stock and then having it all go the way of the dodo, sir?
I never understand why people do this. In these inexpensive names, buying like way out of the money, you're usually better off with the stock. In our Robinhood trader, we saw Sundial, SNDL, which is a Canadian cannabis company, blow up. And, they're buying the dollar calls for 5 cents and the $1.50 calls for 5 cents. I look and the stock is 60 cents. So I just put on alert to buy the stock for 60 cents. And that was the better way to go. So, yeah, I always question the way that some of this call trading in these inexpensive names goes out.
Yeah, I mean, it is called the option block, or network's called the Option Insider Radio Network. Yet, once in a while, stock is the better play, certainly in these kind of cases. Now it is Monday. It is time to unleash Uncle Mike. It is time for the strategy block.
It's time to dispense options wit wisdom, and education. It's time for The Strategy Block.
All right, Uncle Mike, a little birdie whispering in my ear here in the studios, all very COVID safe and socially distant, of course, letting me know that he thinks you're up to a little bit of risk reversals and perhaps more interestingly, hedged risk reversals. Is that the case, Mr. Uncle Mike? Should I give the birdies their birdseed? And then B, what are you talking about with hedged risk reversals, sir?
I think you should definitely give the birds their bird seed and just have them go to the other side of the room so they're 6 feet from you. But I don't know, can birds even have COVID? So maybe the birds are fine. I don't know if the birds need to have a mask on in your studio. But anyway, I want to talk about the risk reversal today, and I want to go through something that I'm doing right now that we refer to as a hedged risk reversal. But first things first, let's talk about what a risk reversal is. Let's say that XYZ stock is trading at $30 a share, and you kind of like the stock. You'd love it at 25. So step one, you sell a put at 25. But you know what? You'd also really like to watch it go higher. And you think it could go higher. So what you could do is with the money you take in from the 25 put that you sold, you can buy a 35 call. Same expiration, different strikes. And what that does is it kind of puts you in a position to where if the stock does go down, the stock will get put to you and you'll buy it at 25 just like you want to do to begin with. You won't collect any premium for it because most of the time, I suppose you could, but most of the time the sale of the 25 put will be canceled out by the cost of the 35 call. So it's essentially a even money trade. Now, with that, if the stock expires between 25 and 35, then nothing happens. It's as if you never bought it to begin with. But let's say the stock goes up to the moon and goes up to 80, then you're going to be a part of it with that 35 call. This, of course, has to happen before expiration. And, of course, the benefit of it as well is that if the stock does go down $2 or $3, then it's as if you never bought it to begin with, so it really doesn't hurt you. So ultimately, if the stock is between 25 and 35 at expiration, nothing happens, so you'll miss out on a little bit of upside. But if the stock goes significantly higher, you will be a part of it. If the stock goes significantly lower, well, you bought in at $5 lower than where you would have bought in to begin with. So that's what a risk reversal is in a nutshell. Now, what I'm doing right now is kind of taking that a little bit to the next level, in that I'm doing more of a hedged risk reversal. And the reason with which I'm doing that is because of the fact that, how can I put this? I'm a chicken. No, I'm not a chicken. I want to actually have some protection on to the downside. And I'm doing this right now in silver, in that I can't give you the exact strikes and expirations or anything like that. My compliance is getting on me about that type of thing, or not getting, but I know that they would if I did. What I'm doing right now is I'm putting on that risk reversal, just as I described. However, what I'm doing with it is adding 2 more calls or 2 more options to it. I bought a put option below the strike price that I sold a put option, creating a short put spread. And because I had bought the protection, I'm not going to have enough money left over to make this an even money trade unless I buy a call spread instead of a long call. So I'm actually I shorted a put spread, and with the credit I got from shorting the put spread, I'm actually buying a long call spread. So in my situation, what I'm doing is I'm actually doing something similar to the risk reversal. However, I'm capping the downside, but I'm also capping the upside as well. Now, the reason with which I'm doing that is that I could either see silver if silver actually goes down to a certain level, I'm more than happy to buy it. And also I have money on the sidelines in case I do need to buy it. So I just have the put spread in place because of the fact that if it does go down to 10 or something like that again, then it's just not going to bite that badly. But if it goes down a little bit, which I think it could, then I'd love to buy it at those levels and get back into it. I personally think it could pull back a little bit over the course of the next few months. But if I'm wrong, that's where I have the call spread in place to where if it goes up significantly, like silver can do, we'll be able to profit on it from the call spread. So what I like about this hedged risk reversal is it gives you the ability to have exposure to something, especially something like silver. Silver's not a trending underlying. Like stocks, you can see stocks have a longer term uptrend, or they'll trade more in a trend in a trend a lot of times. Of course, depends on the stock as to whether it has a long term uptrend or not. But with silver, oftentimes it'll be do nothing, then all of a sudden go way up or go way down, and then kind of go back to doing nothing for a while. By setting it up as a risk reversal, or in this case, a hedged risk reversal, then if it does go down, if I'm able to catch it when it goes down, then I can buy in at a lower level like I wanted to begin with. But let's say that it goes up significantly, like it did roughly 10 years ago, and just goes straight up. Well, then at that point, we're able to capture upside on it via the call spread. And that is the risk reversal and hedged risk reversal for today.
Thank you for that, Uncle Mike. Let's keep on rolling real quick. Mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. You guys ask us questions. We turn the spotlight back on you like we did last week. We asked you guys, there have been many debacles that left lasting impacts on the options market, the 87 crash, longtermcapital.com crash, GFC, so on and so forth. Should we add GameStop frenzy to that list? It started off hot and heavy. Yes, it kind of tended to be a little bit more mixed towards the latter voting, which ended up making the vote pretty much not exactly 50-50. We're pretty darn close to it. 53.8% saying yes, we're living in a post-GameStop world. 46.2% saying no. It's tempest in a teapot. Interesting stuff. I tend to lean towards the yes, just given the fact that everyone wants their pound of flesh, and that usually results in more regulation, which has all sorts of lasting and unintended consequences. But we'll see. Maybe, I hope you guys who say no are correct. I just, if past is prologue, I don't think that is the case. Let's go on here. Like I say, you guys, if you listen live, then, of course, you guys get bumped to the top, just like our buddy there, Mr. Luigi, he of theme song infamy. Uncle Mike, I think he feels a little bad about breaking your streak because he says, I love you, Uncle Mike. So he apologizes for breaking your streak. He also has one more question. The platform that I used has a search criteria for highest net negative deltas. Is that the same thing as short interest? Well, negative deltas, obviously short calls and long puts. That's not exactly a search criteria I see too often. So first off, Uncle Mike, will go to you because you are named. What do you say to Mr. Luigi knocking you off your high horse and then apologizing for it? And then B, what do you have to say about his question about negative net deltas being the same thing as short interest?
Well, first off, no worries, Luigi. I gotta be honest with you, a lot of those songs I guessed anyway, so it was kind of dumb luck how I made the run with which I had. So no hard feelings whatsoever. In terms of the negative net delta versus short interest, then I mean I'd have to see the platform just to kind of see a little bit more about it. But when it comes to the short interest, I think that is something different than delta. So, but I guess I would have to see the platform to give a better answer on that.
Mr. Meatball, is that an indicator or a scan search criteria you're familiar with out there? The most net negative deltas, sir? Is that one you use?
It's not. Well, let's start by Luigi, I don't know if you could hear the quiet rage as Mike was saying. It's okay.
He's simmering out there in St.
I would not want to, don't try and meet Mike face to face for at least a week. Let him cool off a little bit, then it'll be fine. But no, I mean, he's just got, let's just put it this way. Mike is so mad he took he crushed a stress ball into a diamond. Anyway, the negative net delta is going to be on trades, and that's not short interest. Short interest is, how much of the float in the stock is shorted. Big net deltas are, how many big open put interests, how many big open puts are there, essentially, I believe. So you are looking at two very different things.
Yeah, it's more approximate. A lot of people like to fixate on the put call. I think the large net negative deltas is analogous to looking at that. Good questions. A lot of people listening live and chiming in. Randy Frederick, the options guru over there at Schwab, chiming in. We were talking about Disney earlier. He was chiming in on Disney Plus is going to fuel Hasbro gains because of Star Wars toys. And he says, if Hasbro makes the toys, would you call it a toy Yoda? I don't get your joke there, Randy. I get the Yoda part. Why is it? We don't mention Toyota. I don't know. Maybe there's some other lingering part. Maybe his humor is just too subtle. But either way, Randy, I don't get your joke. All right. And Laxin15 is listening live. He's chiming in over there on looks like Stock Twits, saying we're in beast mode every day. Well, thank you for that. Laxin5. We do our best to beast mode for you guys every day as we keep on rolling right on into our final segment. It is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, let's do it. Let's see what we're keeping an eye on till we gather together for our next episode of the Option Block on Thursday. Mr. Meatball, we'll start with you, sir. What are you keeping an eye on? I know you're watching that VIX settlement. You think we make it there, that magical, mythical 21 level by Wednesday, sir?
It feels like we could. And, I'm looking at the options in VIX, and there's a lot of cheap stuff expiring on Wednesday. And vol is feeling heavier and heavier as the day progresses, so I would not be surprised if that did happen.
What about the rest of the OI beyond this Wednesday? You think we can? Are those looking good as well? Were you talking 1.6 million? What'd you say? How many puts are
1.7, almost 1.8 million. I mean, it is astounding how much short interest there is there, and yeah, you got to ask yourself, all right, well, can that many people be wrong? And the answer is yes, that many people can be wrong. But will they be? And I just don't know. It feels like there's some real downside developing here in the coming week.
That many people be wrong. Just witness GameStop from a few weeks ago to see now trading $60. So yes, they can be wrong, but you're right. A little bit, maybe perhaps more informed paper going up. A little bit, maybe in VIX land. Mr. Uncle Mike, same question for you. While you're out there hedging your risk reversals, what are you keeping an eye on until Thursday, sir?
Watching the new all-time highs. And just seeing if we can make new all-time highs still, watching COVID information, and just watching to see what more of policies from our new president. And special shout out to the Tampa Bay Bucks for winning the Super Bowl, and Tom Brady winning more Super Bowls than, I don't know. They just kept saying, kids, if you're watching, Tom Brady is older than your dad. And that's still true in my case. So God bless the old man.
Yes, indeed. That music, unfortunately, means we come to the end of it. I guess Brady definitely is the GOAT. I'm not a huge Brady fan. I have my bona fides as an old school Pats fan from back in the day in New England when they were 1-15 and still red, and Steve Grogan was their quarterback, and I was the only guy for miles around who liked the Pats. I moved on. Never been a big Brady fan, so I skipped out on the whole Belichick Brady era. So if anyone is owed a nice dynasty, it is me. But yeah, I'll still give it up to Brady. That's kind of absurd. Going into the NFC for one season, already pretty much matching the accolades of seasoned NFC quarterbacks like Rodgers and Breeze, and taking a Super Bowl home to boot in one season. Yeah, that's pretty crazy. So there you go. I guess the GOAT, for as much as he's like the Tesla of football, hated and or loved in equal measure. Let's go back around the horn. Let's start in the land of volatility / VIX, a.k.a. Robinhood, a.k.a. Carmen Line, a.k.a. Option Pit. Mr. Meatball, sir, what should folks do if they want to check out all the things you guys have going on?
Go to optionpit.com, and we put out great content every day. All kinds of trades. Come out and read the blog, give us your email, and we'll make sure you get invited to everything that we do. And like I said, we give away a lot of free goodies in our blog, a lot of good information. So Give us a look-see. Optionpit.com.
Lots of good goodies. You too can maybe sometimes save some money on overpriced calls and just buy the stock instead. Head on over to optionpit.com. Get your learning on. And Mr. Uncle Mike, if folks want to perhaps spoil your streak on guessing games or perhaps begrudge you on $1 wagers, where should they go? What should they do?
stcharleswealth.com for more information. If you want to work with a financial advisor who makes every effort to pay his gambling debts of $1 per election night, feel free to reach out to me. I'm more than happy to work with people.
There you go. stcharleswealth.com is the place to go. You know where to go to learn more about what they're cooking up over there in the land of demand derivatives, that cool new futures exchange that you guys could actually buy a piece of. If you like all things volatility and realized vol, Demand Derivatives is the place to go. Bob and Don have been on the show a few times. You can get one lot for $105. That gives you a piece, and that allows you, of course, to also have all those trading credits and everything else they're talking about. Check it out, demandderivatives.com. Click on the crowdfunding link to learn more. They also have a survey. They'd appreciate your thoughts on the markets, and you guys clearly have thoughts on the market, so share it with those guys. They would deeply appreciate it over there. Help kick off a new, perhaps, era in the world of volatility trading. Speaking of all things volatility, crypto, pretty darn volatile. It's coming up in a little bit. We're going to talk about all this Musk madness with Bitcoin. Of course, that even overshadowed the fact they launched new ETH futures over there at CME today. We're going to get to all of that and a whole bunch more in about exactly an hour coming up live on the Crypto Rundown. Got my old friend, Mr. Bill Ulivari from Senecal Capital Management, joining me to talk about all this good stuff and a whole bunch more. Then we're back again tomorrow, Interview Tuesday, all that fun joy Wednesday, Education Wednesday, got Options Playbook Radio, Option Block, Option Boot Camp. You guys love both of those. We mainline in those. Thursday, back again with another episode of the Option Block.
This episode is sponsored by Demand Derivatives, a startup futures exchange and clearinghouse trading the world's major assets in a creative new way. You already trade on an exchange. Here is your chance to own one. Before they approach large strategic partners for funding, the pioneering team at Demand Derivatives launched a crowdfunding portal so that regular traders have the chance to buy shares. Learn more and become a part of this revolutionary fintech project now at demandderivatives.com/crowdfunding. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.